Brad Williams, Frugal Finance. Let's talk about currency. We're going to have about 7 or 8 different sessions related to currency. We're going to get into some just general currency conversion. We'll look at some hedging. We'll look at parity. Parity is a big issue here. What's parity? I'll discuss that in detail as we move along. But here we go. We just have this conversion currency deal. What's better? Should you take Japanese yen, invest it in UK pound, or should you keep your money in Japanese yen and just put it into a CD? What am I talking about? Well, let me show you. Fixed rate bonds are only risk-free in terms of its own units. The US 10-year Treasury is risk-free in the US, but not in the UK or Canada or Brazil. Let's say the interest rate on a UK 10-year risk-free government bond is 9%, and on a Japanese 10-year risk-free government bond, the interest rate is 3%. Why don't you just take that Japanese money and put it over into the UK? Well, let me tell you why. We live in a world of non-free money. In other words, we have certain rules. Those rules are violated. Well, then there's minimal opportunity of free money. But let me show you why. Some people think I can just switch my money over from yen over to UK money and capture that 6-point spread. Wouldn't that be nice? We'd all be gazillionaires. It doesn't work that way. Just move your Japanese money to the UK and make an additional 6% with no added risk. If it was so easy, certainly you can do that, knock yourself out, and many investors do, only once. But there's a little math involved. Okay, there's always a little math. For those who don't do the math, well, buyer beware. So with the math involving currency exchange, remember, money going out, you have to exchange it from Japanese to UK. Then all of a sudden you're holding UK pounds. What are you going to do? You got to move that money back over into yen. What happens if that value changes? Japanese currency trades in yen. UK trades in pounds. If you're a Japanese investor, you can safely buy the Japanese 10-year Treasury and earn 3%. If you elect to buy the UK Treasury, the exchange rate is 150 yen to the pound. Your rate of return in yen depends on the yen-pound exchange rate a year from now. So really smart people will look at forward rates. And you can do some stuff here. It's rather complex. We don't want to get into that. But you can buy futures. You can buy forward rate agreement. But you're not going to get this 6% differential. The market won't allow it. So here, let me show you what's going on here. Invest 100 pounds in UK bonds. Convert 150 yen times 100 pounds equals 15,000 yen into 100 pounds. In a year, your 100 pounds will equal 100 times 1.09. So now you have 109 pounds. Good. We have a conversion, yen to pound, 0.0067. Pounds, 100.0667. Year end, 109. New exchange, 0.7266. Yen was 150. Yen now 140. Conversion, 101. This is a simple math. Okay, let me just go back. 150, that's given. Yen, C18, $1, 1 pound divided by 150 yen, 0.0667. C17 divided by C18, 150. So now we know we have 100. Yen times, pound times yen. Again, we're just going back, repeating it. 66666. And then E18, 150 times this 0.666 gives you 15,000 yen. Year end, we know, we just said up here that the pound at year end is 109. New exchange, G17, 109 times D17, 0.0667. Okay, you got that? We have this number. We have G17, 109 times D17. We had a 0.66 conversion. So now we went from 100 to 109 yen. Now you have more pounds But what's the conversion over to yen? 16,350. The yen is given. Okay, well, it's 16,350, G18, 109, times D18, 150. So 16,350, yen 140. Conversion, so now you're taking your 16,350. You have to convert that back over. You convert that back over. Now you're dealing with yen. So you had 15. You gave him 15 in order to get 100 pounds. The 100 pounds turned into 109. Okay, cool. So now you have 16,350. Great. You think you could take that 16,350 divided by 15 and that would be your return? No. Now, you could keep your money in the UK and continue to roll this over. So put it back in for another year and hope the yen doesn't change. So you add 150, it's dropped to 140. Now you have to convert that over. So now it's only 15,260. So you earn 260 on your 15. That's a 1.73% return. Had you kept your money in Japan, you would have earned 3%. That's it. That's it. Just remember, what's the moral of the story? It looks good right here in terms of this 109 times the 72 exchange. That looks pretty, doesn't it? But you always have to convert it back. So if we did 1635, divide this by 15 equals J18, what's this number here? Divided by F18. We have to go all the way back here, okay? Minus 1. I18, 15,260. 15,260. So here, this would be 16, I should probably need to do this, right? So 16,350, divide this by 15. An unsophisticated investor is going to go, wow, I made 16,350 on my money. That's nice, okay? Well, that's a 9% return. But you have this conversion deal. Taking my time showing you how that worked. Here's the moral of the story. Make sure you do your conversion, all right? Make sure you do this math. This is tricky. You need to convert the change from 150 to 140. 10 divided by 140, 107. So yen to pound, 15. Future pound, 109. Convert 16,350. Plus, we have this other conversion, 107. Yen converted. We're going to multiply this. We're taking 15,260. You can do it a couple different ways. You took E23, 16,350. Divide this by 107, 15,260. We have the same thing here. All we did was we multiply this, I18, 140 times G18. I18, 140 times G18 to come up with this new number. I18 times G18 gives us 15,260. You can do a different way. All we did was take D23 times C23. Here, we did 109, 15. It's this conversion right here, 16,350. Okay, that was simple. Your conversion, 1.07143, is 1 plus 150 minus 140 divided by 140. It's going to come out with the same number, but if you didn't know that conversion, there it is. And then yen converted, this equals E23, 16,350 divided by F23. 15,260. We need a couple different ways to do it. And then, sorry to say, 15,260 divided by 15,000 divided by C23 is 1.73%. A couple different ways of doing it. Here's a different way to do it. You got 109. We have 109 right here times 140 minus 15,000 divided by 15,000. Again, a lot of different ways to skin a cat. Then 1 year bond, yen bond. What are we doing here? We have yen, dollar, 101.01. What's a yen worth? 0.01. And then 100. Now you're going to have 10,000 yen to every dollar. On $100, you multiply that times 100. So now you're a rich person. You have 1,000,000 yen. Yeah, it's only worth $100. Yen conversion, 103, 103. New exchange, 103. Yen, 10. I equals 33. Conversion, 0.103. So you realized a rate of 1.73, lower than the 3% Japanese 10-year bond. You should have invested in the Japanese bond. Just a quick example of currency. On the surface, this looks very attractive, doesn't it? But for those who walk down this path without doing some simple math, find that this conversion is what is the killer. And you can just think of it this way. You want to travel. You want to travel someplace, and you have that right to pay forward. In other words, you can buy your airline ticket early, or you can bet that airline tickets or whatever oil prices or whatever currency prices may change and your airline ticket may be lower. Or you could buy a forward contract, or you can buy a futures currency contract to bet one way or the other. And I'll show you an example of how this works. There's a lot of different ways, and it's not something you just do. It's something you have to think about. You have to understand how the exchanges work. You have to understand conversion. You have to look at forward agreements. You have to look at future contracts. You can probably even buy an option. All right. These are all the tools that Wall Street has created, and they're endless. They're endless. So if you're studying for the CFA, and this is sort of a takeoff because you're going to see this on the CFA, and this is probably a part 1. And no, I don't have a CFA. No, I don't want a CFA. And I'll leave it at that. Brad Williams, Frugal Finance. More currency coming up.